Hey everybody, we are back again with a stock review. Today we are looking at FASTLY Inc. So they are primarily a software company. They have a wide range of services surrounding software. So we are going to get into them, see how they're doing recently, look at their performance, go over the financials, and basically just see how they're doing overall as a company. So if you're interested, make sure to subscribe. If you haven't, I think like 90% of my viewers are not subscribed. So make sure to subscribe if you haven't. And let's get into Fastly. So, Fastly here, you can see edge computing, edge delivery, edge security, edge applications. They are edging everywhere. Um, all of this is basically network services and software. So, that's all you really need to know. But most of their metrics here, as you can see, are basically just staying flat over 2024 and are estimated to continue to stay that way into 2025. Although average enterprise customer spend is actually expected to decrease in 2025, going down to where it was in the beginning of 2024. So definitely something to consider there. Their average customer is spending less in the next year, according to them. So, going through the basics of the company, market cap is just over $1 billion, no dividend. Um, Target price is at 856, which if we see now is at 997. So, looks like a bit of a decrease there. But their long-term growth rate of 22% is really, really good. That is on the higher end of a lot of growth rates that I've seen. So, going into the growth summary, you could see exactly where that long term growth rate is going into effect. 5 year averages of everything, high double digits. EBIT growth of 46% is insane. So, hopefully, they can meet these estimates because this would be phenomenal for the company if they do. But anyway, let's get into some of their financial statements. So, first up is their income statement. We'll see where they are with making money. And it looks like we have growth every single quarter for the past 2 years. If we go into the years, we can see a little bit better of a view. So, very solid sales growth. I hope this is in millions. Yes, so this is in millions. So they make about $500 million per year right now compared to that billion, 1.4 billion market cap. That's pretty solid. One thing I will say though is obviously their operating income is very negative, mostly because of that SG&A expense. But the sales growth will hopefully drive profitability into the future. Net income obviously very negative as well. So overall, they just need to start going profitable instead of growth. But again, based on how their sales are growing, they're doing perfectly fine. We will get into their cash flows in a moment and see if they actually are perfectly fine. But right now, this looks okay as long as they are growing their sales. And hopefully, we can see some profitable growth in the future. So, for the balance sheet, let's see what we have here. So, cash looks okay. They really don't have a lot of debt. Their cash can mostly cover their debt at the moment. Total assets have actually been decreasing for 2 straight years. Let's get into the quarters and see if we could see a little bit of a better view on what's going on here. So, looks like they had much more assets in 2022 compared to now. However, like we saw with the sales earlier, this is not really affecting them. So usually I say that decreasing assets is a negative thing, but it seems like they are really streamlining the company with decreasing assets but increasing sales. So nothing to really complain about there. Again, their debt situation is very manageable. They've actually been bringing it down a fair bit in 2024, 2023 also. So although it is fairly slow to decrease, at the very least they are bringing it down, which is something positive. One other thing I forgot to look at is their total shares. And if we look here, we could see they are diluting very significantly. 8 million more shares in the past year. I'm sure in 2024 they're probably going to continue just based on how this net income is looking. But anyway, let's get into the cash flows. So, looking like we have okay operating cash flow, it's starting. There's kind of flickers of it becoming positive. Um, Most of this negative is looks like some of it is from depreciation. A lot of it is from changes in working capital. Overall, they'll definitely have to work to make that positive in the future consistently. But this is just over the past 2 years as well. For investing cash flows, we could see selling all of those investments as we saw over the past couple years, which is perfectly fine as long as their sales are increasing and hopefully they can turn that into profitability in the future. For their financing activities, you could see changes in capital stock. They are slowly but surely diluting their stock, but they are reducing their debt. So that cancels out a little bit in terms of my favorability for the company. Um, Again, you really don't want to see more shares be introduced, but at the end of the day, if it's helping them to sustain their growth and drive future growth, that's mostly okay. Plus, they are reducing their debt, so not really too much to complain about there. Um, let's look at their sales history so it's kind of visualized a bit. So this is over the past 7 years, as I believe they went public in 2017. Very consistent sales growth every single year. It looks like a staircase the way they're growing. So everything looks fantastic there. Let's head into the ratios, see what we can see. So they do not have the numbers for 2024 up here yet, but I'll go over. So 2023 looked rough, below 51 for gross, below actually significantly better net margin, however, and you can see their net margin has increased for the past 2 years, going from negative 62 to negative 26. And this is actually the close to where their all-time high net margin is at negative 21, which still isn't fantastic, but at the very least, they're trending in that direction. So let's go into the quarters and kind of see where we're moving. So gross margin is above 51 now, which I believe was the 5-year average, which is fantastic. SGA to sales is decreasing and has been decreasing every single quarter for the past 2 years. This could be interesting. As they continue to lower that SG&A to sales, their operating margin is going to get better and better at negative 30% now. Net margins at negative 27. The closer and closer they get, as soon as this goes positive, it could be massive for the company. And I think people are realizing that because the stock price has gone up since I started making the video. So obviously it's got to go up forever. Um, Not really, but ROA ROE looks okay. They're about in line with where they have been. Um, Other than that, we could look at the debt to equity, very healthy at 39%. Nothing to really say there. But yeah, it's about it for the financials. Let's head into their earnings recently. So revenue at 107, plus 26 for security. We don't have the estimates here, unfortunately, but what I can do is look and see over the past few quarters for their income statement. So if we can visualize it here, they had 137 in sales, 132 in the past quarter, which is pretty solid. Definitely some growth over the quarter. Always good to see. Gross margin again beat estimates. Operating margin significantly beat estimates. Actually, almost positive over the past quarter, which I didn't even see. No. Why is that different? Non-GAAP operating margin. Okay, I see what we're doing here. Non-GAAP operating margin is actually almost positive, which is huge. Cash flow was significantly under estimates. However, free cash flow was as well. They were actually expecting positive free cash flow. Looks like their net retention rate fell by 5%, and total customer count looks like grew actually very significantly. 3.6 versus 3.3 estimates and 3.3 in quarter 2. So overall, customers are growing fairly quickly. We'll probably see continued increased revenue from them going into the next few quarters, just based on how much the customers grew. This is just some summaries that went over. So the company, it seems like they specialize in dealing with bots for other companies. So if you want to read about that, that is right here. Um, they basically goes over how they manage bots a little bit and how they use it for their customers. Um, Other than that, enterprise customers was down in the third quarter, so that's a little negative. However, total customers was up significantly, so I don't think that's too bad. Top 10 customers accounted for 33% of revenue in the third quarter compared to 40% in the third quarter of 2023. Now, if you see a lower percentage, that's usually a bad thing, but this is really, really good. So if they're making 40% of their money from 10 customers in 2023, that is terrible, because what's going to happen is one company decides, oh, we're going with someone else, their bottom line is going to be severely affected. So bringing that percentage down is fantastic for them because it lowers their risk customer to customer. It improves the consistency of their sales growth. That is a very good metric to see. Um, Obviously, revenue from top 10 customers also declined 11% compared to growth of 20% year over year from customers outside the top 10. Another fantastic metric. So, although their top sales were declining, they grew revenue with 90% of their other customers, which in my opinion is better. They want to get more revenue per customer overall rather than just getting the top few as much money as possible. In my opinion, that reduces the risk of the company and is almost always a good thing. So, overall, everything looks pretty good for them. Let's look at the stock chart really quick, and we could see it is pretty rough. It is kind of a rough one. They were up well over $100 at one point. Now, what I will say is that their earnings have been looking fantastic. I'm honestly contemplating getting a few shares myself, just to be completely honest, not telling anybody to do that, but it is a very, very interesting company. Um, but overall, we could see they are in a bit of a downtrend, and by a bit, I mean it has been 4 years almost um, of this downtrend, and you could kind of see there is a support line here, but that support line leads towards single digits and sadness. So hopefully they start breaking out of that. We could go into the daily view to kind of see the recent trend, and we could see there is a strong uptrend recently. So hopefully they can stay in there. We'll have to see in the near future how they react to those next few earnings reports. But overall, the company looks really solid for the financials. They need to work on cash flows, obviously. But other than that, they look really good. Debt is low. Sales growth is massive. Margins improvement is very noticeable. So I think we could see a lot from this company in the future. Definitely keep an eye on them. And yeah, that's all I have. So make sure to subscribe if you haven't. Fastly Inc. Check them out. Do some research. Hope you learned something. Hope you enjoyed. See everybody in the next video.